The IPO market is officially back and it's making up for lost time. After 3 years of near hibernation, Wall Street is roaring with new listing. 2025 alone, 95 companies have already gone public on US exchanges, raising over $15.6 billion. That's a 30% jump from last year, and nearly double the volume of the slow years in 2020 and 2023. According to DealLogic, this is the busiest IPO year since the wild days of 2021, and analysts expect up to $50 billion in capital to be raised by year's end. This isn't just hype. There are actually real breakout stories. Circle, the stablecoin powerhouse behind USDC, exploded onto the New York Stock Exchange in June. Stock soared over 168% on day one, and is now up over 677% from its IPO price, with a market cap topping $50 billion at its peak. Circle's IPO wasn't just a crypto event, it was the biggest two-day pop since 1980, leaving over $3 billion in gains for early investors and giving the company the cash and credibility to expand globally. Then there's CoreWeave, the NVIDIA-backed AI infrastructure juggernaut. After a shaky start, CoreWeave has surged more than 350%, riding the generative AI wave. With OpenAI and Microsoft as key partners and a $26 billion market cap, CoreWeave is the first pure-play AI cloud company to really test the public markets. Yet, investors should know that company is growing really fast, but yet remains unprofitable and carries heavy debt. So it's a high-growth, high-risk bet. Another one that popped off, AIRO, a next-generation drone and aerospace innovator, made a big splash. Its IPO priced at $10 per share, and the stock has climbed 122% in just a few days. With the global defense and aerospace sector heating up, AIRO is the one to watch as it pushes through military and commercial aviation tech. Other names like eToro, the retail trading platform, and Chime, the neobank, had posted more modest gains, up 14% and 9% from the IPO prices, respectively. Still, their debuts signaled renewed energy in fintech and trading, sectors that had dormant since the last tech boom. So what's really fueling the surge? Well, it could be that everyone thinks the rates are going to come down, a business-friendly administration, and pent-up demand from companies that waited out the volatility over the past few years. The IPO pipeline is loaded. About 200 more companies are lined up to go public, 13% more than this time last year on the Nasdaq alone. But don't expect a summer flood. Most high-profile deals are being saved for the fall, traditionally the strongest season for new issues. But here's the caution plague. Aftermarket performance is still fragile. Back in 2021, 80% of IPOs are now trading below the debut price. A hard lesson for investors. Even in the last year's rally, some stocks like Chime have seen their initial pops fade fast, reminding everyone that not every IPO is a guaranteed winner. The IPO market might be heating up, but still walking a tightrope. Breakout winners like Circle and CoreWeave have reignited Wall Street's appetite, but selective and fundamentals matter more than ever. The next wave of public debuts could define the market for years to come.